It's 12 o'clock. Welcome to Taking Stock. It is the 9th of November, 2023. Almost forgot the year there. Okay. Welcome to the show. If you like the show, don't give it a thumbs up. Go on, go for it. And subscribe, that's very important. And also a free app for you. It's priceless, but it's free. The Vox Markets app, download that, and you get all the RNSs delivered to you. You don't have to chase around the internet for them. Okay, so talking about sort of stocks, momentum, all that stuff. And I give you 5 companies. Okay, I get the comments in a bit. By all means, comment. Please comment, and it helps me along because John's not here, and of course I'm talking to myself like a mate. I do that most of the day anyway. Having someone to talk to is a bonus, I suppose. But yes, but help me out with some comments. Get involved. If you haven't commented before, by all means do so. Okay, so I'm going to give you 5 companies. All right. In fact, I did do a screener on this, and then 2 more companies popped up because they rallied today. But I'm going to give you 5 companies. Which one would you buy? Okay. So, Quilter, Auto Trader, Time Finance, Trainline, Admiral Group, CT Automotive, and Destiny Pharma. Those are all companies hitting their 52-week highs. Now, here's the thing. It's quite counterintuitive, isn't it? You think, well, I know it's risen a lot. I don't want to buy that. But it's called the 52-week effect. And it states that stocks with prices close to 52-week highs have a better subsequent returns than stocks with prices far from the 52-week highs. It's all about momentum. I'm going to bang on about this again. That's why it's good to look at charts and trends. Because I said, like a rising price attracts buyers. A falling price attracts sellers. Of course, in the end, they exhaust both ways. But it's getting in before that, maybe, and just getting into the trend. And according to a study called Volume and Price Patterns Around the Stocks of 52-week Highs and Lows, Theory and Evidence, conducted by economists at Pennsylvania State University, University of North Carolina, and University of California, small stocks crossing their 52-week highs produce 0.625% excess gains in the following week. Large stocks produce gains of 0.1795% the following week. So they keep on winning. Winners keep on winning. Losers keep on losing until they don't, of course. And then there's an exception to the rule. So I'll remind you again, Destiny Pharma, CT Automotive, Admiral Group, Trainline, Time Finance, Auto Trader, Quilter. Those are, in fact, 7 companies there hitting 52-week highs. Which one would you go for? Let me know. Okay, we're going to a couple of comments. I'll catch up on some comments from yesterday for a start. Gregory, I won't be shopping at M&S because we talked about M&S yesterday. They've been upgraded, of course, and they're having a 52-week high, I think, or gone beyond that. This was, I think, today or yesterday, these stocks. I haven't been shopping, I won't be shopping for a very long time. I didn't like their anti-Christmas woke advert, even though it did get pulled for the wrong reason. I did check out the John Lewis advert today. I don't know if you've seen that. It's a kid with a big plant. It's a Christmas tree. What do they call it? A Venus flytrap plant. It's all right. Informer. This is very interesting, actually. Robin Hood is coming to the UK. Is this the end for H&L, Hargreaves Lansdown? A very advanced brokerage with free services like options. If they do free ISA, say goodbye to H&L. I don't think so. I don't think so. In fact, if you look at what's happened recently, the bombed out retail stocks, and I said this before, where you want to look, in fact, what is it? Because a commentary today saying, let's have a look. Yes, Glenn, I'd go with ABF, which is, of course, Associated British Foods, which is Primark and all that, and MKS, maybe Virtu. But the thing is, the time to look, the big gains have happened, and they in those stocks. M&S, it's rallied. It's got the chart up. It's rallied. In fact, look at this. Look at this. Hang on, let's get this off here. Let me share the screen with you. Look at this. Dame All share. It's tantalizingly close to that 50-day moving average. It's a V-shaped bottom. I don't like that. I'll have to come round. But nevertheless, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9 days on the rise. But M&S, is it worth looking for these big companies like H&L, Hargreaves Lansdown? They're a market leader. Yes, they've been bombed out, but the last trading update wasn't so bad, I think, was it? And those are the kind of stocks with healthy balance sheets. I think a PE of 9 now, where you look at and think people think they're bombed out. But no, I can't see many. There will be some people go to Robinhood and all that. Of course there will. But the older generation, who was the customer, the general customer of Hargreaves Lansdown, they won't go far. It's like changing a bank account, isn't it? You know, there were these flashy new banks come out offering stuff, offering bells and whistles. I said, where were people down here? Why now up here? It made right fit for that's you missed the boat there on Marks. Missed the boat. You know, absolutely. Down here was down, just crossing the 200 moving average. That was the time to get the Marks. ABF, what's this? Associated British Foods. Again, look at crossing 200 moving average. That was the time, 1588. That's 23.13. That's not the time, by the way. That's the price. Yeah, so it's very interesting. And momentum, of course, carries on. The first two comments today is from Dave W. I'm not sure if Dave's real or spam. It says, a great show, daily listener. Seems to be a strong bounce in crypto at the moment. I feel it's an opportunity now to, with a big 2-year sell off. Cardano, Bitcoin, ETH charts are primed for a major rally. In fact, Bitcoin did break up. I woke up this morning, got an alert on Bitcoin. And there's this rumors about that ETF happening, isn't there, on Bitcoin still? But it did break 36. And you can see this here. If I show the chart there, no, look, you can see that there. Punched up above that. And again, it punched up above that as well. And you can see there. So it is rallying Bitcoin. Is this though? Is it down to the ETF, or are people now becoming a bit more risk tolerant? Are they seeing the nascent start of a rally in the markets? Like I said, AIM all share now, 9 days in a row. That's good. That's bullish. By the way, there's news about the Bitcoin ETFs. There's a Bitcoin ETF launch could be laid more than a month after SEC approval. So saying it's nailed on there. But what's the word? Rising the rumor, buying the rumor, selling on fact. So when the ETF actually gets the launch, will it sell off Bitcoin? Let's look at the indices, by the way. Auto Trader, good update from them. And in fact, that's one of the 52-week highs. Let's look at the Auto Trader chart here. Auto, it's one of those companies. They're dominant. It's like Rightmove, essentially, dominant in their field, aren't they? In fact, that's 52-week high, but it's not a convincing rally, is it? It's just spiked up here. It's just above that, previous August 2022 chart there. What else is there? Rightmove's there. Second biggest riser. AstraZeneca came up with news on, I think, where was it? I did have this written down somewhere, but just bear with me, callers. Drug maker raises annual core profit outlook, buoyed by strong demand for its oncology and rare blood disorder drugs. That's a good-looking chart, I think. I haven't looked at it for a while. It's AstraZeneca. Let's have a look here. Yeah, look at that. Look at that. Oh, that is a German. That's a series of high and lows there. It has dipped a couple of times, on the 200. It's almost using that as a springboard, isn't it? But look at this still. It is sort of rolling over, isn't it? There's a series of high and lows, lower highs there, rolling over there. What else? Taylor Wimpey. They come up with news and they say their profits will be towards the top end. Again, it's of forecasts. And because house prices sort of, bouncing on the bottom. The price rise in house prices, first time in 6 months we've seen. So that's bullish for the home builders, maybe. And in fact, I think Chris, who looks at Vox, pointed out today, an article today, I think it's nationwide, offering a mortgage below 5%. You need 40%, deposit, but it's below 5%. Of course, it's below the base rate. So they're seeing interest rates coming down. In fact, Hugh Pill, who was a chief economic advisor. Let me just scroll down here. He's going to read it in, isn't he? He did say, look, he said on Thursday, it was essential interest rates stay at their current level in order to tame inflation, in a shift in tone from earlier in the week when he discussed possible cuts next year. He's been told off, hasn't he? Hugh, I was going to say Phil then. Hugh Pill, shut up. Because he did say on Monday, a rate cut in August 2024 doesn't seem totally unreasonable to me. So he's been told to shut now because you've got to talk tough, to get the economy slowing down. That's what's happening there. All right, let's trend seems better than stocks at the moment. That's what Dave is talking about crypto. I don't know, Dave, are you real? You get a lot of crypto bots on YouTube. Okay. Worth looking at microcap Croma Securities, whose year-end results on Tuesday. Ian, when you weren't here Tuesday, I did look at those on Tuesday. Have lifted the share price from a 50-week low. Net cash and like-for-like sales and GM percentages are significantly up. Yeah, and we did look at them, Chroma, I think, didn't we? CSSG, isn't that, I think the ticker? CSSG, Chroma. Let's have a look at the chart. Oh, that's yeah. Oh, in fact, interesting. It has come down all the way down. Look at that, and now we are breaking that 200-day moving average. Could be the start. Something. I'm not going to say it goes straight up. Nothing goes straight up ever. I mean, to prevent you having fear of missing out, if you go back to a time when it wasn't a downtrend and it started to pick back up, you often see, well, in fact, it did rally strongly there. It went sideways for a couple of days and went back up. But you often see, generally, if it punches up that quickly, it has to go sideways or down a little bit before it resumes the uptrend there. So, okay. Fundamentals and technicals are lining up for Time Finance. Yeah, Time Finance. Yeah. It is a good little company. So I think their PE is still quite low. Time, it's a nice little company doing very well, and I think their PE is like 7. I think. But look at that. Yeah, nice little chart, isn't it? You can see there. Higher, up. In fact, there's a broken out on those there thing. I didn't read it, but maybe I should. But I do like them. But again, time to get in there, crossing the 200-day moving average. Let's look here. Adam, Vox Markets app is great. Thank you, Adam. I appreciate that. Yes. If you haven't tried it, let me know and give it a try because there's been a lot of work on it recently. Watkin Jones, bottomed out. Decent directed buying. That's Paul. I do like Watkin Jones. It does remind me of being in school because, of course, I'm from Wales. So I'm sure that's like my teacher in school shouting at 2 kids. Watkin Jones, stop messing around. I always reminds me of that joke. Who is that who said that? I don't know who it was, but it said basically, I could never ever pay attention in school. My teacher used to say to me, "Wait, stop staring through the window. Come back in the classroom." Okay. Let's look at Watkin Jones chart quickly. I'll get you the news on the front page of Vox in a minute now. Watkin Jones, settle down. Let's have a look. Yeah. You've been onto these for a while, haven't you? It's right. Look, it's done this before, right? It could be the one here. It has, a couple of times gone above that 50-day. It has done that before. You scroll back. It's good to look at charts previously. Now look at how many times it breaks a 50-day moving average and goes a bit lower. Breaks, goes lower. Breaks, goes lower. And then the granddaddy of the moving average is 200-day. It breaks that. That's what it needs to do, really. I mean, early indications when it starts breaking the 50 is good start of maybe a bottoming process, but then really needs to get about 200-day. So it's a little bit off that, but but maybe the bottom process is starting. Oh, I do like a bottoming process. Yeah, you could be a spot on there, but as yet, need a bit of confirmation of that. Okay, let's have a look here. God, I gotta say, I'm tired. I woke up last night at 5 to 3 in the morning. I think I'm a bit drunk with tiredness. I didn't go back to sleep. I just got up and started looking at stocks and stuff. Okay. What about corporate bonds? Why take the risk? Exactly. That's Slobbery Slob. Hey, welcome, Slobbery Slob. I don't think I've ever seen you before. I surely would recognize that name if I had heard it before. Yeah, that's the thing. I think I was watching CNBC last night, and someone said, "There's $6 trillion. That's $6 trillion of dollars sitting in money market funds." So 6 trillion is sitting basically in obviously very low risk, for 5% yielding sort of government bonds and all that stuff, money market funds. So why take the risk? So until the market starts moving, you start to see some big moves. That'll tempt people out. They'll start chasing it, and then more people will start talking about it. And then you realize, it's like a tsunami. It'll keep coming. When the money inflow starts, it doesn't stop. And that's when a bull market happens. And people start jumping in. So I'm not sitting on 5%. I remember back in the day, a couple of years ago, when you think 5%, why would you want to do that? You can get a couple of 100% in micro caps and nano caps. At the moment, you've lost a lot of money. So it's the other way, isn't it? Just amazing how it flips. Your psychology can flip very quickly. When the market starts gaining, you realize 5% is paltry. But at the moment, you're lucky not to lose money. So that's why people put money in there. But that's a drag on the markets, absolutely. Elle said, I'd buy time. Imagine buying time. Yeah, I bought some time today. Yeah, about a half an hour. That's all I needed. DP, then Trainline. I did look at the balance sheet Trainline. I went through this spreadsheet somewhere. It did look very good. I'll get it one day. So I've got quite a detailed spreadsheet. It took me years. It's got about 1,000 formulas in it. And I didn't look very good, but it's rallying. In fact, let's have a look at Trainline. Trainline. Why is that at the 52-week high? That was, maybe it is. Where are we back here? No, it's not, is it? January 20, that's not a 52-week. That screen is obviously wrong. But that there, like I said, it's not, that's a very uncomfortable train ride, that is, isn't it? It's like the wild train at the Disneyland, Disney World. But nevertheless, look at that. Breaking to a day, golden cross here. And you can see it is breaking. These there, they are days, obviously, the red bars are where they've gone up and come back down. They haven't closed. They've closed, the highest close is here. So that's the highest close it's had in, 6 months, or in January, I suppose. So maybe the train is coming into the station there. You know what I'm saying? Choo-choo. But Destiny Pharma, you mentioned there, but it is having, it needs a breather. It's amazing how many people don't buy on the breather. They fear missing out when it's going up. And then I need to get into that. But don't buy on the breather. It'll have the same kind of thing here. It'll come down across this way and go back up again. And then be, I didn't buy it on the way. I should have bought it on the way down. Yeah. There we are. There we are. Comments there. Destiny has the biggest potential. Time, because I already hold. Might buy some more as it's seriously undervalued. Seriously. That's Ben. I bought markets at 85 pence and sold at 160. Should have held. Momentum is powerful. Ben, little tip. Okay, little tip. And I've messed this up several times. Theoretically, how much, as long as not using leverage, theoretically, how much can you lose on a stock? Yeah. Answers, anyone? Answers on a postcard? I'll wait. So 100%, isn't it? That's what you can lose, 100%. And how much can you gain? Well, multiples of that, especially in micro caps, nano caps, multiples. So my advice would be down, to limit the downside, but put a stop loss in, but don't limit the upside. And then if you move up, you get 20, 30% up, move stop loss up a little bit, make sure you make room for volatility a little bit. But then you keep moving up, and then, never limit the upside. Try not to do that, because, if you get the stage where you are literally 40% up and you put your stop loss, say, and about 30% below that, you're 10% up, the worst you can do is make a 10% gain. That there is a risk-free investment. It's gold. Gold, I tell you. Nothing in life is risk-free, but it is if you use a stop loss when you're in profit. It's hard to do that with micro caps because you've got to allow for the volatility. But what I'm saying is, if you are massively up in a company, maybe don't always top slicing. No. Don't top slice. Just limit your downside. That's what you need to do. Didn't you just say buy at highs because of Momo? Yeah, there's a good chance. No, what I'm saying is, I think you can get in before that. It's a lazy filter, 50-week highs. you can spot momentum before it gets to a 52-week high. Like I said, I just pointed out. Let's look at Marks, for example. I mean, like I said, Marks or Spencer's, MKS. Let's take these lines off because they're lines there. Let's say if you just, not every time it breaks 200 moving average that it will go up. It could have a fake break, but then you could, like I said, you could put a stop loss in, 20% below, so you won't lose more than 20%. But I mean, look at that there. You can see on that chart, pretty much. I'll take the 50-day off, just to make it clearer. Okay, so that chart there, broke down there. It's coming down, downtrend, breaking 200 movers, and that was what, February 2022. Okay, and then it broke back up in January 2020. So it's a year. That's a year. So these are not like, it's not day trading. 200-day moving average, which is a rolling, smoothing of the price over last 200 days. And so you broke it up there, gap up on that day, 4th of Jan, 2023. In fact, see, you're held since January. There's no day trading, and it's still going up. It's still nowhere near the 200-day moving average. And in the meantime, you could have moved the stop loss up a little bit every time. It's a risk-free trade, everyone. That there is gold dust. I tell thee. So 52-week highs. In fact, where was that's more than 52 highs, isn't it, Marks? Yeah, Feb 20. But it would have hidden 52 highs, I suppose. Runway here, the 55 here. But again, yeah, just choose that. It's a bit easier, isn't it? Than just going 52 highs. Okay. Go a lot of comments. Time, yeah, Destiny. Marks, yeah, sorry. Order trader. Car sales could taper off now. EAAS has been established. Yeah, like I said, I went looking at the new car, and the lady, Jessica. So I said, how much is just query. So I said, how's business? She went, it's a little bit slow. I said, I suppose so. His financing is quite expensive. And she said, yes, it's like literally for used cars, 10% minimum. And like I think for brand new cars, it's 8%. So you see that's going to have a major impact. But the thing with Auto Trader, it's that the companies still advertise. They've got advertising with them, they make it less. So they're just there on, so people pay them anyway. You've got to be on Auto Trader to sell your cars. So it's, they benefit whatever happens, sort of. I mean, it can be a slowdown somewhere. Sean, I've yet to determine what cryptocurrency is. A store of value, a currency? No idea. No, way too volatile, and the amount of bot spamming is a major red flag. Yeah, it is. Yeah, honestly, you put a YouTube video up and literally you can go to spam. There's loads of bots, and they talk to each other. Phenomenal AI. Oh, that's very good. They'll make a point. That's very interesting. But have you checked out this cryptocurrency? It's amazing. My friend told me about it, and they talk to each other. And you think, what? These real people? They're not just bots. They're not people. Yeah. Dave, not spam. Real person following the charts. Big help. I just think crypto at the moment is easy to follow with your charts at the moment. Yeah, but yeah. I do think though, it could literally fall off a cliff. Bitcoin, or I don't know. This is my thoughts on it. Right. We don't know who created it. Yokomoto Nashijimo. And he said there's a hard limit of 21 million. Is that right? 21 million Bitcoin. But it's just a program, isn't it? This guy, we don't know who he is. All of a sudden, he could say, I'm upping the limit to 25 million. He could do that. No one knows who he is. People just assume it's limited at 21 million. We believe him. But we don't know who he is. Who is he? I think it was created by the state. I think it was that'd be an amazing ironic twist, wouldn't it? If it was created by the Fed or someone. But so I don't trust a non-existent guy. It's no, you can't because it's programming. Yeah, but these people just really odd, isn't it? Really, people just competing online with machines to try and crack algorithms and win Bitcoin. What? It is nuts. It is crazy. It is absolutely nuts. It is there as basically speculation vehicle. That's all it is, isn't it? That's all it is. Mr. Steve, Justin, read jokes. Don't give up my J job. What are you talking about, Steve? Oh, I can serious sense, right? Thank you, Steve. So, Dave, plus it's liquid, primed for a rebound with the AIM bounce. Okay, very good point, Dave. Phil, how much money and how long, realistically, would it take owners on the market to make a dent in the Rightmove market dominance? I suppose uncertainty of the fight competition is enough to scare. Yeah, well, on the market, they've got. It's not. They've got us not far off. Not far off the amount of extra advertisers that Rightmove have, but they don't charge. And Rightmove charge about $1,000 per advertiser, whereas I think on the market it's charging literally. I mean, they're using up their payment. They charge, I think, 188 or £200. It's a fifth the price they charge, so they can edge that up. Then they'll do well. Okay, let's get some. Sorry, I've been sort of a bit sidetracked here. Sorry, I'm not making any jokes. This is Steve said. Steve's in charge of the humour. He is entertainment officer. Trufin, I own that. I do like that. I mean, I've held them for a while. They've taken a while to get going, but Satago, I think, is a gangbuster. And Oxygen Finance is very good. But I think the chart is going sideways. Poolbeg, this is quite nice. I do like Cahill and all the guys there. They're now the guys from Amrit Pharma joined the leadership team at Poolbeg. And like I said, in fact, Kyle's a good talker. I really like him. He puts his money where his mouth is. I believe that Poolbeg has the potential to deliver the same success as Amrit, which I co-founded in 2015 and IPO'd an AIM in 2016, which went on to dual list on Nasdaq in 2020 before its sale in 2023 for $1.48 billion. That's good. I like that. He's good. He's honest. He's one of the guys. He's got the right balance of salesmanship and honesty. Sometimes there's not. You get some CEOs, they go towards salesman too much and they lack in honesty, but Kyle's a genuine fella. I do like Kyle and Jeremy and the team there. What's the chart of Poolbeg like? POLB at the moment. Oh, well, it said that, didn't I? Yeah, I did. It is dipping me line there and come back up there, but there we are. Okay, let me just hang on. I got the wrong tab on here. Bear with me. Okay. Hang on. Okay, that's it. I had the wrong thing on there. Okay, front page. Let's scroll down to the winners losers. Big Dish. What the heck is going on there? Is that still around anyway? Marx is most followed. eEnergy. I did a webinar last night actually, and there was a member of my investment club there who was quite skeptical about this deal, which he has a fair point. I mean, eEnergy was 13 million, and then they offered for a part of their business for 30 million. And so he said, why didn't that company just buy the entire eEnergy and sell off the rest of it? I said, well, there is more complications buying a PLC because you need board shareholder approval. But I do see there's a massive disconnect in that offer. But of course, I mean, I don't think people, if it's not rising on that, people are maybe not believing it either. QBT, of course, people are jumping, following the hot Bitcoin money. Corsair, Clean Tech, eEnergy, Auto Trader, FAB. I keep getting questions about FAB. I did say sometimes companies are too small to scale, and when they have a cash and impact, they've come out today with a news that it's not that positive actually. Fusion antibodies, saying the company has anticipated an easing of these constraints, talking about new drug development and things, and it's not materialised as quickly as expected. They say trading conditions remain challenging. Sorry, a bit of windy pops there. But they do say essentially they think now that their cash runway is still okay until November 2024. But they said it will be kept under close review by the board. I should hope so. Part of the job. How much cash is spending? No idea. Who's in charge of the cash? I don't know. Anyone? By the way, talking about cash, this is a funny one, isn't it? Argentex, right? I held these. The board change again. This is now the CEO Harry Adams given the boot essentially, because I think they're looking for growth to ensure the continued growth of the business. And now the CFO is gone, Joe Stent. I'm thinking, what is going on there? CEO and CFO, that's not a good look. So I said, Joe Stent, Chief Financial Officer from the board of the company, announces that they announced the Argentex announced the resignation of Joe Stent, Chief Financial Officer of the company, with immediate effect. She's agreed to work a notice period whilst a suitable replacement is identified. And one line, we thank Joe for contribution to Argentex and wish her well. Doesn't sound that, sincere, really, does it? So you're immediately going, but you work a period. I don't understand that. And consequently, I don't know what happened here, but I did get out for Argentex at the right time. I go in, where is it? On the Golden Cross, pretty much, around here, and it gapped up, which is nice. So I sort of sold it around here. But I'm sort of glad. Look at that. I don't know what's going on there, Argentex, but it's not good. Anyway, front page of Vox here. Most read Audioboom rising. Now, this is a nice looking chart, starting to come round. But they do say they've signed these podcasts. Matt and Shane's secret podcast can't be that secret because a lot of people listen to it. Hearts start pounding, gains and gossip with Gracie and the dating detectives. They said they expect to contribute more than 5 million downloads per month to the network there. And so, I guarantee that the non-executive chairman, Michael Tobin, is glad this is starting to rally. He's been buying all the way down. What I'd like is a chart with dots on it showing where he's bought. In fact, does it have it? No, it doesn't. But you can see now, it's very early stage, like I say, but you can see now it's starting to rally a little bit. You've broken this 50-day moving average, breaking previous highs as well. And so it's a nice start. And thankful for shareholders there. That could be a bottom. It looks like it is. But I hope it is, because Michael Tobin, the non-executive chairman, been buying all the way down. I think it was about 5-6% of the 5% of the company now. But it's been a painful ride. Angle, trading a business update, judged by the share price, they're down 15%. And I did look at this. Now they did 2.2 million sales. Sales secured at 3.3, but they're expecting to do 3 million. They didn't, and they do say they have cash. What do they have cash of? Can you say 15 million? So, okay, that's not too bad. But I went back and I said, okay, well, let's look at it. Always worth a loss-making company. First thing you look for is how much cash do they have, because they've got their cash from somewhere, and it normally comes from shareholders. So I scrolled down. I thought, let's get interim results there, and this was September to the end of was it June, and they had cash of where was it, 22 million. So okay, so literally 7 million in a few months. So yeah, they're burning like that. In fact, they burned close to 10 million in 6 months. So that's a bit worrying. We get really high burning company like that. But there you are. Argon results. Chill Brands. I don't understand what's going on there. Non-tobacco vapes in the store. I've never heard of. Landor raising money. United Oil and Gas. They're still getting problems getting dollars out of Egypt. They say here, but they say they're engaged with a preferred potential partner on their Walton Moore license in Jamaica, and the authorities secured extension. They want to get extension to the license, which ends in January. But they do say there's problems in Egypt, and to be honest, it's not getting any better. But they are getting some money out of there, but it's in Egyptian pounds, equivalent to $1.8 million. But no USD payments have been received since August 2023. Why is that then? I don't know. Is there I don't know. Is it limiting US dollars leaving the country? I don't understand. Yeah, fusion antibodies there. Okay. Let's just get this in here. So, fallers, with the works. This is very telling as well. There's a survey out saying people are now 2/3 of people are going to cut back for Christmas. Half-year trade update. They do say here, the works of that toy shop. I don't know if you've seen them, where the kids love to go in and break toys. But the macro environment was challenging throughout the period, characterized by high inflation and low consumer confidence. Consumers coming in just looking not very confident. Can I have one of those, please? Pardon? Can I buy one of those, please? They weren't very confident. In the 9 weeks since our previous update, consumer demand has softened further, which is not good. They've become less confident. Come on, man, stand up. Have a bit of confidence. but they say mindful of this, and they say always trading in the 6 weeks between now and Christmas will have significant bearing on the overall results of the financial year. Last year, consumers left Christmas shopping still very late in the season, and we expect that sales may follow a similar pattern this year. What's 18 million? Maybe any figures in here. 3.4%. There's actually any figures in there. Net debt of 2.5, 17.5 million. So you have plenty of headroom there. No worry about that. But trying to get some kind of the results. So 280 million revenue growth of 5%. Okay, so they are profitable. 5 million profit before tax. 5 million. Do you know what? I'm not into, in fact, is that another retail stock? Works. What is it? What's the ticker there? TheWorks. WRKS. WRKS. So they made a profit last year. They got plenty of banking. It was 18 million. They did 280 million. Well, it's come down a long way, isn't it? IPO'd on July 2018. It's a messy chart, that one. But yeah, it's worrying people not spending. How much money? 100%. Ben Sharma 100%. Mr. Steve 100%. All infinite. Hang on. I don't know what the question was. Sorry. Would you sell after half 100% rise? No. It depends how illiquid it is. Sometimes if the thing is, if our liquidity builds as the share price moves up, more people will buy the stock, and so liquidity. So essentially, the stocks I kind of buy, I've got to be careful of the liquidity. And in fact, my spreadsheet does that. It shows average daily volumes, and it does a tenth of that. Because if you're looking to sell a company and you are literally selling more than the daily volume, you're not going to get out of the stock. And that can happen on certain microcaps, nanocap stocks. So, but if your liquidity is good, I wouldn't worry too much. But if you're saying you put a stop loss in, it drops down, and your amount of stock is going to be more than the average daily volume, you've got a problem there because it probably won't fill your order. But you got to keep an eye on that. But like I said, if you have a winner, generally the average daily volume increases as the share price goes up. Because of course, people people buy rises. If you put 1k into 3p stock, you can still lose 1k. Yes, absolutely. 100%. Yeah, unless you put a stop loss in at 20% down. If you look at the average volatility on a stock, say over a month, and say how volatile is that stock, or this a week or something, and say okay. So if I buy now, if you buy it right, if you look at the fundamentals, you get the what right, get the when right, the momentum. It shouldn't really go 20% below your buy price, really. Maybe it's going to range for a while. But if you get it wrong, if something comes left field and you can't plan for, like a CEO stepping down and a CFO, like, oh my God, then that can happen. So you can, either you start off very small and only put a tiny amount in portfolio-wise, so it doesn't bother you at the start, or you put a stop loss in, and then you can protect yourself. Because there's certain things you can't protect yourself against. Like particularly Valerie, when they were going gangbusters, and turns out the CFO was pocketing all the cake and the money. Auto Trader up, 7%. Yes, the 100. I think honestly, I think something Hargreaves Lansdown, especially with this worry about it, you find it won't affect them too much, honestly, because there's plenty of players out. There's a big market, and I think something like Hargreaves Lansdown is a cracking stock. But I think when the market turns, one of those are the kind of stocks where, okay, don't wait until the trend changes, because it can still go down and get cheaper. But I think it'll do very well the next couple of years. And it's one of those things. It's safe enough. You could put a decent chunk in. Yeah, I know I've messed around with that. Do you know what? You would never understand, Ben, how many moving averages I've messed around with my time. I used to print out charts, hundreds of them, and draw on them and all that stuff. And but I've gone back to literally, 25. 125 is a good. We're talking moving averages. 125 is a good metric. 125 is very good. And I've a very good asset fund manager once told me about the 125 moving average. And I looked at loads of charts, 125. and I did like it. I still got it on the thing. Anyway, Hollywood strike may be off. Yeah, ADF. Yeah, ADF actually rose today. I got an alert on ADF. John will be happy with this. Facilities by ADF, if you're not aware of those, they actually, supply all the sort of services to I mean, it has gone down since IPO, but there's not many of them in the country. And of course, British studios do very well. It's a very good industry to be in, and they supply all the Winnebagos, the catering. And I've been on set previously with these. It's very good, very impressive. From makeup, Winnebagos to stars Winnebagos. That's ADF. They've had a bit of a rough time when this Hollywood strike thing happened, but now it's back up. It's a little dip there. John does own some of those. Okay, anything else? CEO and chef going equals red flag. More than the red flag, Sean. That's the rainbow flag. Woohoo! Careful. Burford, 2Q results just out looking pretty spectacular. Are they? I didn't see that. Q3, Burford. Let's look at Burford here. Sorry, let's share the screen here. Burford. By the way, Burford aren't the biggest company on the name. Someone did say that. It's like China Medical, something like that. China Medical. Do they have like something? It's one of the companies I heard recently. 11% dividend. What? I don't know if it was them. Capital provision income. Total revenues up 403% to 749 million. Is that right? Okay. Book value. Okay, I'll have to look into this. Non-GAAP, GAAP. Okay, let's put revenues, total revenues, operating income. Okay, yeah, it's looking good. So that's 2023, 3 months of September, 9 months. Let's go to 9 months then. Yes, good growth here, operating income. Look at that, from 75 million to 643. That is amazing, isn't it? Income before taxes, 500 to 600 million compared to 8 million, 8.5 million. That's very good. Going from a loss. They've had a big case on, have they? Burf, let's look at the chart on Burf. Burford Capital. Is that it? Yeah. Oh, it's not really done anything, is it? What's going on? Not really done a lot. What's the market cap there? They're 2.4 billion. Okay, too big for me. Anything else? Okay. Argentex, yeah, sorry. Gregory, could you talk about some lifestyle companies? Give us an example, Gregory. Gregory, have you ever heard of Bidstack? Yeah, I did say actually. Trufin has acquired. What did they acquire? I can't think of the name of it now. I did say it on Twitter. It's not Bidstack, by the way. And Bidstats. I didn't want to get confused with Big Stack. Bidstats, different kind of thing. So what's quite nice here is Oxygen Finance, one of the biggest players in this space. And their revenues are very long. The contracts are like 5 years. They know pretty much 93% of their revenue transparency in the next 5-6 years. But they've acquired this Bidstats. It's a suite of tools bundled into easily accessible freemium and subscription services. The site has more than 50,000 users of its free subscription service and 500 paying subscribers. But I do like here, the purchase will be funded from Oxygen's cash balances and expect to be earnings accretive on an ongoing basis from year one. So that's decent. Yeah, it's like Bidstacks, Bidstacks, right? Never acquired Bidstack. This is never actually delivered on the promise of revenue growth. And I remember I was really into them. They came to the market, and they expect to have like from in a new area. This was. I realise now it's pretty much quite a niche area. It's games, but it has to be in the kind of format, And they came out. It was like 3.6 or 5.6 million in the first year. Wow, that's amazing. And like I said, they came out with 40 grand. And I think 5 years, they've missed every single revenue target by a mile, pretty much. I mean, that's a red flag. You can forgive it once maybe even twice, 4 times. Doesn't make sense there. It's obviously lack of communication, or the communication between them and the broker is something's going wrong. Well, I know what's going on. I know what's happening there, essentially. Yeah. What else is up there? Poolbeg Pharma, Time Out reports strongest revenues. Is there something else? FAB, Argentex, and S4 Capital came out, didn't they? This is third quarter trading. Obviously not that impressive, but he's been given a lot of leeway. Took on a lot of debt at the wrong time. Sir Martin Sorrell, because he is Sir Martin Sorrell. I find that ridiculous, actually. Just Sir. You can change the name to that if you want to. Just put on your credit card, debit card, Sir. Just add Sir to the start of your name. What does it mean? Doesn't mean anything. Gregory likes 10 lifestyle. Blue Jay Mining. Are you talking about the companies run by directors' pockets, not shareholders? Yeah. Downing Strategic Microcap Investment Trust PLC has declared it's going to wind down. Definitely worth reading. The comment about small variancing, Ben. Yes, it's worth it. It's so hard. You can see. But this is symbolic of the bottom of our market. Obviously, the bottom forming process can take a while. But this is, like I said, no IPOs. Very hard to raise cash when the liquidity is sucked out of the market. And you find when it starts to rally, the real proper rally, it will bounce up very quickly and aggressively from a small base. Listen, I'm cracking on here. Steve, yeah, right, okay. Right, well, it's nice to chat to yourself here. I held an awful one, supposedly with IP for finding oil. The news ramped up the deals with oil majors, but never any revenue. Ended up as a shell. I think Santander used it to IPO, but not sure now. Yeah, there's a lot of that around. Yeah, and it's for growth companies, and that's what you're investing in. Small. I'm talking about companies with revenue, of course, not pre-revenue. That's a whole different game. But for growth companies, of course, the proof is in the growth. If they don't have growth, and that's signified in my mind by top line growth. That shows there's demand for the product. There's increasing demand for the product. If it's not there, and okay, you can afford one miss, but 2 misses, no. Don't give me a second chance. Once it happens, get out. That's it. Okay, that's it. I'll just cover off a little bit of macro, because there's something here. There's mortgage. I don't know why they talk about this. Mortgage arrears up sharply, right? So really up sharply. With landlords hit hard. The number of people falling behind on their mortgage payments rose sharply over the summer months. Figures from the banking sector show rising interest rates have put pressure on homeowners, with 87,930 in arrears, said UK Finance. It's up 18%. Oh, they realise landlords, the number of arrears is double, but they say the sharp rise in mortgage arrears is still below 1% of the 8.8 million outstanding mortgages. So it's not obviously perilous levels. It's 1%. But yeah, different solve with people, but it's not crazy level, scary level, is it? This is worrying though. It's in fact, it's not so worrying. We talked about deflation yesterday. In fact, it's right there. But look at this. China, of course, second biggest economy in the world, it fell by 0.2% compared to the previous year. These are consumer prices. And China all producers also cut their prices at the faster rate. Producer price index fell by 2.6% year on year, following a 2.5% drop in September that could push inflation pressures down globally. So it's not a bad thing if you assume we've got a problem with inflation rather than deflation. If you think we're heading towards deflation, that's bad, because China are now exporting deflation. Not disinflation, deflation, which is quite worrying, or maybe it's not. It's hard to know, isn't it? I mean, if inflation is sticky, this will help. If it's not, if we're heading on a course now that's towards deflation, that is not going to help. So it takes your pick. I'm a little bit, I'm bullish on individual stocks, but I'm a little bit bearish on the macro. Anyway, if you listen, by all means, if you listen to this on the podcast or just afterwards, which more people do, of course, then by all means, if you want to talk about suggest a topic for tomorrow, let me know. Or just do Friday Fund, whatever that is. John will be back on Monday, hopefully. But that's it. Thank you very much. If you like this, thumbs up, like, subscribe to the channel. It does help us a lot. Our figures are ticking up nicely. Thank you for that. If you've done that, that's much appreciated. And download the Vox Markets app for free. That's your payment to us, even though it costs us nothing or you nothing. You know, it's nice, isn't it? Thank you very much. Speak tomorrow. Cheers. Bye bye.